Hello everyone. Welcome to the Financial Times, your one-stop shop for the latest financial news. In this video we will be discussing the January inflation numbers for the US economy and what the uptick in Producer Price Index could mean for the rest of the year. To kick things off, let's recap the latest news. Producer Price Index, PPI, which measures what raw goods fetch on the open market, increased 0.7% in January, the biggest jump since June of last year. Expectations were for a 0.4% rise, while the previous month saw a decline of 0.2%. Core PPI, which excludes food and energy, surged 0.5% against forecast of 0.3%, while core PPI excluding trade services was higher by 0.6% against the estimate of 0.2%. 12-month headline PPI increased 6% and was a notch down from its 11.6% peak in March 2022. Interestingly, this surge in producer prices was accompanied by a 0.5% jump in Consumer Price Index, which measures the prices you pay for goods and services. This just goes to show that inflation did not subside as much as expected as the year came to a close. This is primarily attributed to a combination of seasonal factors such as an unseasonably warm winter and fuel prices, which are notoriously volatile. The report also showed that consumer spending more than kept pace with inflation, as retail sales increased 3% for the month and were up 6.4% from a year ago. Moving on, the number of jobless claims declined to 194,000, while the Philadelphia Federal Reserve's Manufacturing Index demoted to -24.3, well below the -7.8 estimate. Above all this, the increased PPI numbers have garnered the attention of Federal Reserve policymakers who are intent on controlling inflation and bringing the number closer to the 2% goal by 2025. In this regard, Cleveland Fed President Loretta Mester had this to say: "My expectation is that we will see a meaningful improvement in inflation this year and further improvement over the following year, with inflation reaching our 2% goal in 2025. As for the markets, the update sent stocks tumbling as the Dow Jones futures went down more than 200 points. All in all, the January inflation numbers have pointed to an increase in nearly every major sector, which could suggest that the economy is headed in the right direction. That being said, some analysts also suggested that the numbers could be an anomaly, so only time will tell as to how these developments affect the overall financial landscape. And that's it for this video. Stay tuned to the Financial Times for the latest financial news updates.